What if the real key to building wealth in today's unpredictable economy isn't about picking the next big tech stock or timing the market, but understanding the centuries-old tug-of-war between two investing giants, growth versus value? In this video, we'll break down which strategy is outperforming right now, how economic shifts change the game, and most importantly, which side you should be on. Before we dive in, don't forget to hit that subscribe button for weekly breakdowns of market strategy, stock psychology, and long-term wealth planning. Chapter 1. What are growth and value stocks? Growth stocks represent companies expected to grow earnings at an above-average rate compared to the broader market. Typically, they reinvest profits to accelerate expansion. These companies are often found in tech, biotech, or innovation-led industries. Value stocks, by contrast, are shares that appear to be undervalued based on fundamentals. They often have steady earnings, pay dividends, and appeal to conservative investors. Examples include utilities, energy, and consumer staples. Examples: Amazon and Tesla exemplify growth. Coca-Cola and Johnson & Johnson reflect value. Chapter 2. Historical performance. Which wins long-term? Value has historically outperformed over long periods, 1926-1990s, attributed to lower risk and steady cash flow. Growth took the lead in the 2010s, particularly during low interest rates and the tech boom. Performance flips depending on macro conditions. Post-pandemic, value surged in 2022-2023 amid rate hikes. Chapter 3. Economic cycles and their impact. In recessionary periods, value tends to outperform due to stability and earnings consistency. During economic expansions, growth thrives as investors reward future potential. Interest rate hikes favor value due to compressed valuations in growth. Chapter 4. Key metrics to analyze growth metrics: EPS growth, revenue growth, ROE value metrics, price to book, PB, price to earnings, PE, dividend yield PEG ratio balances valuation with growth prospects, useful for hybrid picks. Chapter 5. Global influences and today's macro trends. The Fed's aggressive 2022-2024 rate hikes reshaped capital flows. Emerging markets versus developed economies also influence style performance. AI boom boosts growth stocks. Commodity rebound lifts value. Chapter 6. Risk profiles of growth versus value growth are in higher volatility, prone to price swings. Value are slower growth, but typically with dividends and strong balance sheets. Younger investors may tolerate growth risk. Retirees often lean value. Chapter 7. Portfolio construction. Diversify across styles, 60% growth, 40% value, or vice versa, depending on risk tolerance. Blend across sectors to reduce style concentration. Consider age-based allocation, life cycle investing. Chapter 8. ETFs for growth and value. Growth ETFs, VUG, QQQ, ARKK Value, ETFs, VTV, IWD, SCHV analyze underlying holdings. Avoid overlap for true diversification. 2025 Investment Outlook. Who's winning? Growth stocks rebounding in AI and fintech sectors. Value continues to show strength in energy, defense, and utilities. Watch sectors influenced by government spending, sustainability, and automation. Chapter 10. Behavioral finance and market psychology. Herd mentality drives growth bubbles. Meme stocks. Value ignored during high optimism but shines in corrections. Stay emotionally grounded. Use checklists and rebalancing rules. Chapter 11. Real-world case studies. 25-year-old tech investor overexposed to growth saw 60% drawdown in 2022. 55-year-old dividend investor missed gains in 2020 to 21 but preserved capital in bear markets. Balanced portfolios weather both storms. Chapter 12. Hybrid strategies and factor investing. Smart beta ETFs target value, plus momentum or quality factors. GARP investing blends growth with reasonable valuation. Dividend growth stocks like Microsoft or Visa offer middle ground. Chapter 13. Defensive Tactics for Uncertain Times. Hold cash reserves. Invest in low-volatility ETFs. Increase exposure to dividend aristocrats. Chapter 14. When to switch strategies. Monitor market leadership. Are FAANGs fading? Fed pivot or inflation peak can signal style rotation. Use tax loss harvesting when switching. What the experts are saying in 2025. Buffett. It's still value if you understand what you're buying. Cathie Wood. Innovation compounds faster than the market expects. Hedge funds now blend style factors more than ever. So, growth or value? The truth is, it's not always either-or. In a world of AI breakthroughs, rising rates, and global uncertainty, the smartest investors stay flexible. Which strategy fits your goals? Hit the subscribe button and turn on notifications so you don't miss our next deep dive on building wealth through strategy, not speculation.